What's up, everybody? Thanks for joining me on these analysis. We're going to be looking at MicroStrategy today. Currently, we're down to 267. As you know, there's been a lot of turmoil in the market and uncertainty due to tariffs. So everybody's feeling it. S&P 500 has officially hit bear market territory. If you're looking at the cash index, it's down more than 20%. But I still remain bullish on my same view on MicroStrategy over the course of this year. We have seen moments where Bitcoin has come back to sweep its old highs before taking off. So this is nothing that we haven't seen prior. The structure on MicroStrategy still looks very bullish. Currently at 266. So we're still holding the gray trend line right now in pre-market. We'll see what happens throughout the day. Hopefully we get a solid candle up and we don't get that retest and move down. But we still have our bull flag intact, still looks good. We have this primary trend line that we've been getting a retest off of. It looks like we're coming back to retest it once again, potentially today. We'll see how it goes. And we still need to break this top trend line here. And we need to reclaim this horizontal level of support and resistance as well. So the price action was looking extremely bullish, and then we had all of this stuff happen recently. So Bitcoin dropped to a total, I think it was down to 74,000, and now it's currently at 77,200. Obviously, it's going to vary based off of that, but I still think this is part of that shakeout. They want extreme fear. They want people to capitulate before this thing takes off. So this could potentially be a time to accumulate, not financial advice, but this price action looks amazing when you discount what's happening now. I mean, we essentially have a gap down from the close. 293 to 264 is about a 9.9%. On the daily SMAs, we were having some resistance and we were fighting with the 20-day, but now that's not really our concern. Now it's more so this gray bottom trend line and the bottom of the channel, along with this downward sloping trend line. The SMAs underneath looks like it's going to be the 200 that's going to be holding price up if we reach down to this 250 level. Hopefully not. On the weekly, we were trying to get above this 20, but we were kind of stuck between the 50 and the 20. So hopefully we can get a nice spike upwards if we get some positive sentiment and hear some good news with tariffs and stuff like that. And let's see if we can reclaim this 20 in trend line and move up higher. On the Bollinger Bands on the daily, we were also fighting with the blue Bollinger Band and this horizontal level of support, which we actually closed at, but now we're back underneath. So we have to fight to get above this and the blue Bollinger Band once again. But once we get above it, I think we can get a nice move to this trend line and this red Bollinger Band up top. And we're stuck in between both on the weekly. On the daily RSI, we were creating higher highs, higher lows, creating a nice trend, fell underneath it, retested, and pushed down lower. We moved underneath this moving average where we can move up higher, get a W-shaped move to the upside, and eventually get back to oversold territory on the daily. On the weekly, we're still creating that bearish momentum, but maybe this is the bottom, and now we're starting to establish higher highs, higher lows. We'll see how it plays out. We need to break above this moving average and move up higher to oversold territories. We want to see these green shaded areas like that. On the MACD, we are starting to create some red candles, which isn't a good sign, but that's okay. It can always flip back around and push up higher to overbought territory and create that green momentum that we saw prior. On the weekly, we're still headed downward, but this thing can always curl back up if we get a nice shoot up to maybe this Fibonacci zone that we have drawn out, and maybe we can create some green candles and move up higher. We still have our flagpoles playing out so far. We have a flagpole. You can measure this flagpole to call the next move. And if you can see here from the beginning of this next leg, it called almost to the T, the top. And then if you measure from here, then you get about 1100. And if you measure from this move here, then it gets you to about 1200. So let's see if this is the next leg up and this is calling the next move. That'd be nice to see. And then we're going to go see our Fibonacci levels So these are Fibonacci retracements for the golden zone. So this is our golden zone here, the 0.5 to 618. It's a strong continuation to the upside and a strong level of support in a bullish pool. So we got 3 touches, or actually a little bit more, but 3 strong touches. This one, and this one. And it pushed up. And now from this bottom to this top, we have our golden zone here. We're underneath it currently in pre-market, but we'll see how it plays out. But we were closed inside of it. So let's see if we get a strong move to the upside from here. And then when you flip the Fibonacci retracement and you go from here and pull downward, it gives you your price targets of 2618, which we essentially hit. We hit that on this one. And now when we pull it from this high to this low here, it's showing the 2618 to the 2272. That's where we have this gray shaded box. Let's see if we make a move up there. And sometimes the 1618 is a price magnet as well. So maybe we retest off of that and eventually break through and hit these top levels up here. But overall, I remain bullish. I think this is short-term noise. This is the time to accumulate and add as many shares as possible before we get a run up later on this year. Usually when you see strong moves like this is usually some kind of capitulation event, because you don't see the S&P 500 dropping at this kind of pace. So the S&P 500 this past week, from this wick to the bottom, is down 12%, which is insane. And if you go from this wick to where it hit, 16% in 2 candles. And from all-time highs, from here we officially hit bear market territory when we hit that 21.86, but now we're currently down 19.68%. So we're now teetering between a bear market and just a correction. But that's all I have for you guys. I'll keep you updated. I'll see you in the next one.